Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk this afternoon at MarketSite, we have James Clair, President of Brokerage Services at ViewTrade, Terrence Cheung, Director of Product Management at LiquidityBook, and Chris Hurley, Senior Vice President and Director of Institutional Sales at CAPIS. We're here to discuss the transition to T+1 settlement and its impact on various industry constituents. Gentlemen, it's great to have you back. As always, we made it through T+1. Before we get into that, James, let's start with you. Give us a brief overview of where ViewTrade fits within the ecosystem.
Well, Nick, so with our business model, it's primarily the technology that we develop and deploy to support brokerage firms, banks, institutions, advisors, wealth tech. We're in about 30 countries globally, and then we have a full brokerage solution behind it.
Right, and Terrence, remind us LiquidityBook.
So LiquidityBook is a software as a service platform provider. We provide different trading systems and platforms for both the buy side and sell side. Our solution completely web-based, and it's on the cloud.
Right, and remind us CAPIS, Chris.
CAPIS is, well, first, thanks for having us back, Jill. CAPIS is a institutional-only agency broker trading global equities predominantly, also derivatives and options and fixed income.
Terry, let's start with the history and benefits of this transition to T+1. Why did the conversation get started to move to T+1, and what are some of the benefits for the markets?
So back in, this is a quick recap of our last discussion. Back in 2014, EMEA moved from T+3 to T+2, and then shortly after, in 2017, US, Canada, and Mexico moved from T+3 to T+2. So now we're crunching that time a little bit more. In 2024, US, Mexico, and Canada will move first to T+1, and hopefully EMEA will follow suit in a few years. So the benefit it includes improving market liquidity, reducing counterparty risk, and also just lowering costs for the market in general.
Yeah, James, was the industry asking for this? What was some of the historical context behind it?
No, it was inevitable, right? It needed to happen. And as we were talking about earlier, this week is a perfect example of that, right? The volatility, extreme volatility in the markets, seeing firms that may have struggled with their increased responsibilities for the NSC charges, right? The VAR charges, right? The value-added charges that basically measures the liquidity of the counterparty risk, right, on the street. So going to T+1, you basically cut that risk in half. So yes, it's very, very beneficial to the the entire industry.
Yeah, Chris, would you say that clients were prepared? Was the industry prepared? Because I haven't really heard much about it, and I think if you don't hear about it, that's a good thing.
Well, I think the broker dealers definitely were prepared, and because they did it when we went from T+3 to T+2. We already use the systematic method for settlement, trade settlement. So we were really most nervous about things we couldn't control, such as the asset managers and the third-party bank custodians.
Right.
Because in order for things to work the way they did, which by the way they worked pretty well, managers had to make sure that their trades were affirmed with their custodians on trade date. They had to make sure they sent accurate information to their executing brokers, such as CAPIS, in terms of commission rates is a big variable. And thirdly, the custodians had to be ready to receive affirmation systematically to where everything could settle by 11 o'clock in the morning the next day.
So it sounds like you have to be on board with this.
Yeah, well, I mean, we had a small number of clients that were still using manual processes. We were able to influence them to make sure they were either getting systematic or staffing up to make sure that all that information flowed through accurately and on a timely basis.
Yeah, I would imagine there'd be some risk there if you're not up to speed with the rest of the industry. I mean, who's going to want to have you as the counterparty?
We were worried about that, and the fact that if there were any charges, they would come to us, and then we would have to try to collect them from who the party was that was responsible. Thankfully, that did not happen at all.
Yeah.
So we're grateful for that.
Yeah, I'm sure they're grateful for it as well. Terrence, anything that you can share and some additional thoughts in terms of the transition and how it impacted different industry constituents?
So one of the reason T+1 went quietly was because, and this happened last time too in 2017, Canada and Mexico went live on Memorial Day, as their markets are somewhat dependent on U.S. market. Those trading days activities were very low, so we were vigilant. Even though we were off, we monitored our clients' Canadian and Mexican activities to make sure that the messages coming in had the right T+1 day instead of T+2. And then subsequently, on Tuesday when we came in, we did the same thing, and we noticed that everything just went really well.
Right.
And same thing last time in 2017 when U.S. went live. Canada and Mexico also went on Labor Day, which also had a Monday as holiday, and U.S. went live on a Tuesday. So the market itself was prepared for this.
Yeah. Well, if you have international clients, wouldn't that mean you have to almost be 24/7 because settlements are different based on different time zones?
Yep.
Right.
That's correct.
Right.
So based on different time zones, settlement days different. Now, one of the systems that we provide that's affected the most is our sell-side middle office system. So for that system, we receive drop copy trades from various front office systems. And one thing we noticed for this transition is that the fixed session time, the lines between the front office and middle office, when they start and when they end, should be adjusted because now you have less time on the same day to correct trades. So when things happen, you don't want the fixed session to be down so that corrections can't flow down properly.
Yeah.
So those are like one of the T+1 provided insights for us to make these enhancements and adjustments going forward.
Well, I mean, James, that's a good thing though. Sometimes you have to go through those types of scenarios to understand, what redundancies have to be in place. How have your clients responded? Because a good amount of ViewTrade's clients are outside of the U.S.
Right. No, correct. And because they are larger banks, larger institutions, I mean, they have a pretty good handle on managing their clients' activity, right? So you take the increased operational infrastructures that they had, and you marry that with the technology that we provide, which really monitors all their daily activity, and it really did make for it allowed them to manage the process much easier. And so we really didn't see, we talked about it being a Y2K type. It was similar, right, in that it was not as, it wasn't as disruptive as a lot of people may have thought, but it wasn't perfect, right? I mean, there are a couple hiccups the first couple of days, getting clients, straightened out, but really one of the things that we're still seeing, and which is going to help in other jurisdictions making this move, is on arbitrage, right? So a lot of our clients that are trading U.S. equivalents of the European securities that are still T2, that's a balance, right? That is that they still are. We have to work out, but I do believe that it's a perfect segue into these foreign, we'll call it European markets. They look at this transition, they look at the Y2K-ish of the transition, and hopefully that will help spur them to move a little quicker than originally expected.
Do they have to move quicker? Like GDPR was a requirement for U.S. firms to operate in Europe if they had clients in Europe. Are they mandated to be on T+1, or is that a choice?
I think it's a choice, but if you want to interact in the global market, which I mean the world's getting smaller, you all have to be on a level playing field, right? So it's not mandated, but it's going to make the flow of money, the flow of securities globally, much smoother.
Yeah. Chris, why not T+0? Or is it still too soon for that?
I think it's too soon, but there's just a lot of issues in getting there.
Right.
Technology that we're using right now is antiquated compared to a blockchain type of system where you have an immutable ledger that everybody can see and there is no question as to who the counterparty is. when you have the current system we have, I feel like we have a long way to go before we could get to T0. Terry, what do you?
Yeah, so before T0, we have to make sure EMEA goes on T1 in 2027 or so, right? So last time it took 3 years for US to adapt. So hopefully this time will be the same. So we're looking at after 2027, if Europe goes on T1 successfully, then we'll globally as an industry will plan out when T0 should be and who should go first.
Right.
Well,
but, I'm sorry, but also to truly be at T0, you need to align all the asset classes, right?
Right.
Which, not only the equities, but you need fixed income, the FX, and even down to the options, right? They're going to have to go T0. Now you're talking a whole nother ball of wax.
Yeah.
Different regulators, different exchanges, I mean, a whole retooling of a lot of systems.
Yeah, I mean, that's why it's almost flippant to ask, well, if the blockchain infrastructure exists, why don't we just move it? It's like you pick it up out of a basket and you move it elsewhere. But because the challenge is we do operate through multiple jurisdictions. I mean, even in the US, right? Each state is a different jurisdiction with its own securities laws and so forth. But let's remove the jurisdiction hurdle as an example. Terry, do you think, is it possible, do you think at some point we'll see assets move to the blockchain in the future?
I think we're still a little.
I mean, it sounds really early to me.
It sounds really early.
I mean,
to
you have to get regulators up to speed and the exchanges.
Like for example, like Chris said, a lot of the clients are not even on fixed allocation. They're not even sending their instruction in at 4 o'clock. So like those are the biggest hurdle that we have to solve right now is to build more electronic connections, make sure communication is seamless before we have that T+0 talk or before we have that blockchain talk. On top of it, like maybe the milestone is, hey, we can introduce AI or machine learning to apply default instructions if the client doesn't send the allocation instruction in, right? So maybe the brokers can tell the client, if you don't allocate your trades electronically, by default, it will be this account. I mean, that's how we get paid. That's how we get paid anyway.
Right.
Most payroll systems do that. And then if you change it, I'll make corrections if we make it in time. So that way, that the broker will never miss the T+1 deadline currently.
Yeah, it just seems like clients are the end users. I mean, I think about it myself. If you sell something from your crypto account and it's in your checking account within seconds, so it's almost like we're hurdling over, the structures that we have in place. And it's not just as simple as picking it up and moving it elsewhere. I mean, you have legacy, physical infrastructure, and then you have different jurisdictions, different regulations. Do asset managers, do their clients even want this?
Well, I mean, there's a lot of different participants with different interests and different technologies, and I think over time, when T+1 becomes old hat, and every bank custodian, every asset manager, every broker dealer, every exchange starts to get all on the same page to where T+1 is old hat, everybody's comfortable with it. There's going to be I think a debate of a lot of different ways to get to T+0, whether it's with blockchain or whether it's some hybrid of that. So, but we'll get there eventually. Maybe not in my lifetime in this industry, but we'll get there eventually.
And also, how much more collateral are you saving now?
Yes.
Right. How much you already reduce counterparty risk so much?
Yes.
Is reducing from T+1 to T+1 even worth it?
Yeah.
Right.
I think the clearing firms are the biggest winners here in terms of how much they've saved in collateral by only having a 1-day settlement window instead of a 2-day settlement window. So
when you say saving collateral, does that mean that they have the opportunity to use those funds to invest elsewhere and redeploy back into the business? Because, James, my question is, does staffing, do you have enough of people with the right skill set to be able to even execute, even think about T+0 at this point? I mean,
well, T0 is I honed in on the technology aspect of this the last time. T0 is going to be completely technology driven. Yes, blockchain will be part of that, but if you think back, you talked about blockchain 10 years ago, no one even knew what you were talking about.
Right.
5 years from now, blockchain is going to be, on everyone's tongue, right? And that will be key to making T0. But to the point, is it really necessary tomorrow? No, it could be 3 years down the road, right? But I think we're getting there.
So, Terrence, what does the back office look like now, right? I mean, we know it has gotten smaller and it's different. You're not doing paper and spending all night and weekends trying to rectify trades and match trades and so forth. what does it look like now? Is it smaller than it was T+2? Like, I mean, let's take a step back and even, what does this look like conceptually? Is it less people? Is it people with different kinds of skill sets?
I think right now there hasn't been much change to the back office
Right.
because there are still exceptions that's creeping up. And as the brokerages automate these solutions, I think at some point more clients will be electronic,
Right.
and there will be less staff needed in the back office, and T1 will be much smoother at that point for us to discuss T0.
Yeah, it's just so fascinating to me because coming from an era when we were trading with paper and time stamping and trading in fractions and so forth, while it's always great to be young, I kind of like having that experience because if something goes down, at least you understand the manual process. I mean, so for example, you didn't start your career in T+1, you started in T+3. So if something should happen, you have experience to draw on. That's why I was asking.
Or you're dependent on that time for you to correct things. With T+1, that's drastically reduced, and you just, by the time you finish thinking about it.
That's what I'm saying, like when you
have
talk
to
about the
take
right
an
skill
action.
set and having the experience to kind of revert back, not manually, but be able to, benchmark it to what we did in the past, and this is how you could rectify a situation should something go down. That's why, that's why I'm always wondering, is there enough skill set? It's not as easy as going, oh, let's do T+0 because crypto can do it.
I think the skill set's out there. It's just a matter of us digesting this move that just happened.
Right.
And then repurposing the resources that we all have internally accordingly. Terry was talking about how if there is an issue with message traffic, there's some incorrect information that got sent at the end of the day, and you don't discover it until after the market is closed, the amount of time you have to fix that is drastically, shorter. So instead of reducing staff, you might have to have staff that's different, that is, there to cover those gaps.
Right, but also we'll call it the changing of the guard, right? Like you're talking about the cage. Those days are gone, right? It's now the programmers and developers. Those are your staff.
Yeah.
Right,
Those are the people you depend on.
I mean, do you ever get to take vacation? What if it goes down and you're, I'm just kidding, but yeah.
I bring my laptop. So at the same time, the software robustness is also a concern. So from a technology provider perspective, we want to make sure our releases are as stable as possible because we can't risk it going down or having like a massive issue that requires a lot of time to correct. Like the volume can be high if we can correct it in a promptly manner, but if the time that's needed for the correction is linear to the volume that you need to correct, then aside from extending fixed session time, you better make sure those things don't happen, that your software just needs to be better. Test it more. Yeah.
And overnight trading is becoming a thing too. Trading U.S. stocks overnight.
Right.
And that's going to complicate things. It's going to take us a while to get our arms around, who's on first in overnight hours and who's taking care of what. So, I think Wall Street has an amazing ability to adapt to change. I mean, just look at how things have been. I mean, I'm older than you, so I can remember there were two places to route an order when I got in the business, and we were trading fractions, and everything was paper, and trading desks were noisy, raucous places. Now they're very quiet. Everybody's using electronic messaging. Everything's pretty systematic. So I have a feeling we will adapt.
Right.
It's just going to take us a little time, and we're going to have to sort of rely or push back on the regulators in terms of the pace of change.
Right.
Right.
I think it's
how quickly we move.
And on the brokerage side of it, that's where I think the biggest change is the exchanges, the regulators. I mean, the money movement. I mean, today we're basically it's journal entry on a global scale where it's just money moving. That's not going to be the issue. It's you don't have the runners anymore, but you still have to physically or have that technology that can move the securities between parties.
Well, it's all relative at the end of the day. All right, appreciate everyone's insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.